What's going on, guys? We're going to do a little midday, right? We're going into lunchtime here. We're going to do a little midday kind of technical analysis on the Nasdaq 100. A lot of you guys out there trading futures with prop firms. Hope you guys took advantage of Apex's 90% off sale that they were running. If not, you guys can always get the best available discount at the current time with D. Anthony. Now, what I want to talk about here is this daily chart. So we had some pretty good moves off the open. I think about 65-70% of the active traders in my community at Evolution Traders, they made money within the first 5 minutes. And it was off the initial push down and that retest of this daily 50 simple moving average. Okay, so there's a lot of stuff going on my chart. There's a lot of moving parts, but I kind of want to talk to you about where this 50-day moving average is sitting at. It's sitting right here at about 23,300, let's call it. Okay, so that initial push down off the open provided what we call the opening drive. So the OD play, the OD setup, that opening drive, it's for a little bit more of an experienced scalper who can manage risk and is comfortable trading the open. Because again, if you're just starting out or you're barely starting to, build some consistency, I would definitely recommend sitting out the first 30 minutes of the market. But as you build up more screen time and more experience, you're going to find those opportunities on given days where you can trade the open. Now, every day, is there a beautiful setup to take? Maybe, but a lot of times trading off the open very early can either do one of two things, okay? And I think we've all been there. It can make you a lot of money very quickly, where you kind of have a very easy and short workday, or you can get into what seems like a great trade and it goes against you and you blow your entire account up, right? So again, if you're still in that kind of learning phase, quote unquote, just sit the first 30 minutes out. Take the first 30 minutes of your day and actually watch the price action and try to build some structure and build a game plan for yourself. Now, going over this daily chart here, what I'm looking at is we've got a very definitive line in the sand, okay? If we can continue to hold yesterday's lows, bounce opportunities is what you're going to try to want to find. If we get any candle that closes on a daily time frame below the 50-day moving average, we are flipping to the short side using yesterday's low as that line in the sand to start to target much lower prices, 22,586, okay? That's where we're going to, try to build a plan around. Now, if I was to draw this, kind of trend line here, this looks like we're forming a little bit of a flag pattern, okay? So we had those highs of 24,068. We pulled back once, we put in a lower high, and we've pulled back again. Now, this most recent pullback, going back to yesterday and Friday, it did put in a higher low. Okay, so that's a good sign for the buyers. If we can continue to reclaim a little bit of this short-term supply, what I want to reclaim the 5, 10, and 20-day moving averages. Okay, so the 5, 10, and 20 simple moving averages on the daily time frame. If we can reclaim those areas, I'm comfortable targeting this back up to 24,000 and beyond. Okay. If we can't and we get that closure below the 50-day moving average, again, what this was nothing more than a dead cat bounce for a continuation back down into those 22,000s. Okay, so that's how we're going to play it. What I want to do and what I want to spread to you guys is for the remainder of the week, maybe even going into next week, as long as we are trapped and pitter-pattering in between this 50 SMA on a daily and this 20 SMA on a daily chart, you got to be careful. And being careful could mean a number of different things to you. That could mean sizing down. That could mean shortening up those targets. That could mean taking fewer trades. That could mean being a little bit more patient off the open. But what you don't want to do is you don't want to be trading like an absolute madman when we're really not going up or going down. So this morning I read a few comments. People were saying, oh, the market went up and then it's back down and it's back down and it's back up. Why do you think that is? Look at your macro timeframes. Look at some of the larger timeframes. Is the chart even in a in a spot where it can move higher? And right now, no, it can't. It can't move higher until we reclaim supply. Is the chart in a spot where we can go lower? Absolutely not. It's got to get below this 50 SMA, 50 EMA before it really has room to go lower. Now, there's a big difference. Can a stock go up? Can a stock go down? Absolutely. Intraday, it can go up and down, but it doesn't necessarily mean it's going higher or lower. Big difference there. In order for us to go higher, we need to reclaim this supply. Okay. In order for us to go lower, we've got to lose this demand, and that demand being the 50 SMA, 50 EMA. Hope this kind of gives you guys a little bit of context. If you guys want to trade with myself and the rest of the team, get access to all of my strategies through the course that I've created, you guys can join right now at 50% discount rate. That link is down in the description box below. Also, remember code DAnthony for your Apex evaluation needs, daytraders.com evaluation needs, and Top 1 Futures evaluation needs. I will see all of you guys on the next video. Stay safe, stay patient. Catch you guys all next time.